So hello everybody and welcome. I'm very glad to be here, and thank you, Rainer, for the invitation. It's really cool to be here with so many of you, and I hope I can provide some value. So, and then I asked myself, what are my goals for this talk and what would make the biggest difference for you in that I couldn't provide in 45 minutes. So we will first look at why do traders fail. I have a few slides about cardinal sins of trading and the biggest problems, and then afterwards I will tackle all those cardinal sins and problems and show you, based on my own journey, what has helped me personally. It is a little bit outside the box. You won't find many of the things on trading books or websites, especially only if you follow mine. So, but yeah, so I think that would make for the bulk part of this presentation, and then at the end we will get into a few technical plays. I explain my method a little bit, but it's nothing fancy, and you will see that for me it's most about the process and not so much about the method at all. And then hopefully we'll get into a Q&A afterwards. So this is a diagram or pyramid that I got from doing some research on trading performance and how retail traders perform in general. And so at the bottom you can see my mouse, hopefully. If not, it's not that big of a deal. Most traders have the dream to trade and then buy yachts, big watches, sports cars, and travel around the world, live in penthouse hotel suites, and yeah, I think that's a very it's marketing driven from all the trading websites, brokers often, and educators. So it is a very dangerous picture and a dangerous goal or image to have, especially in your first 4 to 5 years, because having too high of expectations often leads to demotivation when you see that it's not that easy and trading does not work this way. And so you can see that the drop-off rate after 1 month, only 40% of the traders remain. So 60% of the people who enter trading, they quit very early, and many of them also go bust. So, and if you can see then the next step, 80% quit within the first 2 years, which is probably, yeah, what I've seen around me too. I started with a few people around me, but then over time people drop out, and yeah, life get in the way, especially if you have a job and you're not seeing the results. Then you move on to other things, or trading goes on and off. You come back to it when you think, okay, I hit a roadblock in my life, in my career, I will get out again. And yeah, so that's a very dangerous trap. After 5 years, only 7% remain, and 1% of all traders over the long term can profit net of fees. And you will often see the 95% statistics, all traders fail. And what surprised me is that this 95% is not true at all. The rate is much higher. So 99% of traders will never make any money. And yeah, I think having worked now with over 1,000, a little bit over 1,000 traders, and I think that statistic is pretty accurate. But at the same time, it is not because trading is so damn hard, and although it is not easy, but it's not such an impossible thing that it is impossible to make money with it. What I think is the main problem here is that people lack a serious approach, and I have to admit, if you have a family, if you're on a job 9 to 5, then it's very hard to take this seriously. You just usually have a few hours in the evening, but even then it's even more important that you know how to organize yourself. You have to know what to avoid, what are the big problems that traders have, and so we will get into that so you can cut away sometime from your learning curve and get on the right way and not follow all the wrong advice or wrong approaches that I see so many traders have. So that's the 6 cardinal sins of trading, what I call them, and I will go over them briefly, and then we will get into a few specifics. So the first one is probably the biggest one. It's method hunting. It's where you, or some people call it system hopping. It's where you go from one method to the next. Often traders, even after one losing trade, they just think my method is not working, I need to change my method, and then they enter this dangerous cycle where they never have any consistency. Not taking trading seriously, that's what I touched upon already, and I will have a few very specific tips how you can make a big improvement in your overall approach later. No, risk management is probably one of the biggest that I always see is traders don't use stop loss. They have wrong expectations or perceptions about stop loss. They think it's something that trades against them or works against them, which is not true at all. And also over leveraging, taking too much risk, entering revenge trading, and all that falls into this category. Then fourth, here at the bottom left, is missing a review process, and this is a key in my own trading. And whenever I talk to new traders, I always ask them at least get basic piece of paper and write down your trades, write down the errors, but we will get into that later because it's a big eye-opener and it's something that you can do very easily. Unrealistic expectations, I already touched upon that. If you think that within 2 years you'll be able to buy a Ferrari and drive to your penthouse by clicking a mouse on the 5-minute chart, then you will be up for a big surprise, because that's not how trading works at all. If you are entering the market with such big expectations, it's very easy to get demotivated. When reality hits, then you will be frustrated, and this then often leads into over-leveraging, abandoning all risk management, system hopping, indicator hopping, and all that stuff. And also thinking short-term is a big problem. If you want to make it as a trader, then expect that this is your new career. Expect that you're in this for 30, 40 years, and don't expect that you will make money within the first year, even the second or third year. Expect that it is a slow grind, and accept that this is going to be just like any other career where you enter, first you don't know anything, and then you just build your way up. So, and let's get into the specifics a little bit, and then I will help you with a few tips what I think is very valuable and can make a big shift in your thinking and your trading approach. So I'm starting with method hunting, because I think that's maybe the biggest problem that you have with the normal trader. And system hunting, or here writing the learning curve, probably some of you have seen this chart. I've shared it a few times on social media, and I think that this is such a big problem here. The trader starts, we are here on the black graph, the trader starts the method, then he studies a lot, he reads some books, he studies his indicators, he looks at the formulas, and then he sees some progress, but then he has 1 or 2 losing trades, and what happens is that he starts doubting his method, and then he looks for something new, maybe changes his indicator, changes the settings, the time frame, the markets, whatever, and then what happens is you're completely resetting your learning curve, you're starting again from zero, because a trading method is something very dynamic. It consists of many different parts, and you cannot just change one thing, because everything is interconnected in a method. If you have a different indicator, obviously you will read the markets different, the way you enter trades will be different, the volatility around your trades or the volatility criteria and momentum criteria change, and then also stop and profit taking has to change, trade management will change, holding time and all that, and that's something not many traders take into account, and they think, okay, I just changed my setting from 5 to 10 on my MACD and then everything will be fine, and that's obviously not how it works. So that's what I see over and over again. Traders start out very optimistically, they have a few good trades, they learn a lot, and then bam, they hit a roadblock, 1 or 2 losing trades. Then what I also often see is when they have a loser, they change the indicator setting and then say, oh, if I would have used an EMA instead of an SMA, then this could have been a winning trade, so maybe my indicator was wrong. And then that's what you will see for many months, sometimes even years. Traders repeat the cycle until they finally drop out. And whereas the orange or here. The orange curve here shows the optimal path is where you pick one method or one style and you continuously work. You just make a commitment, okay, and say, okay, I want to be the best reversal trader, and I'm not going to look at anything else. And this does not mean that you will never change your indicator or that you are stubborn, but you know what you are after, you know your style, and then you make constant improvements over time. And I think that's with anything in your life or any skill that you learn, is at the beginning, of course, you won't be the best brain surgeon, and but you don't expect that to be, or you won't be the best soccer player or chess player or whatever, but you don't change and you say, okay, I'm not going to be a good soccer player, so let me try basketball, and then you don't hit the ring and you say, okay, maybe baseball is a better thing. You don't expect that, but when we are in trading, we often forget that, and people don't think that it's such a big change if you go from one method to the next, but it is a very big change, and it's a very big problem that I see with riding the learning curve, system hopping, method hunting, or whatever. So my first tip is that you will always, or that you should start to avoid system hopping. Look at yourself when you have your last changed your method, your indicator, and don't tell yourself that okay, I should just change my indicator, then I will be a profitable trader. It is not how it works. Instead, you should always focus on the process, and not all winning trades are good, not all losers are bad. This is very important to understand, and most traders are here on the left-hand side in the results-oriented mindset, and this is how amateurs traders think, is when they have a losing trade, they think, oh, my trade was bad, my method is bad, I suck, so I should get a new method. And on the other hand, when they have a winning trade, they say, okay, it was a great trade, I'm an awesome trader, maybe I should ramp up my risk. And yeah, so that's a very bad approach, and you should always look at the process of your trade and ask yourself, have I respected my rules? Have I accepted or applied my risk management? Did I act within my plan? And then ask about the process instead of the result. And here on the right hand side is that the process-oriented mindset. This is where the pros are in any sport, in any field and skill, and also in any profession, is you don't expect to win every hand, or in poker, or every trade in trading. You don't expect to win any game in soccer, but over the long term, you know that if you follow your process, you keep improving, you keep analyzing, then you will get better over time. And so you should always ask yourself, did I follow my rules? Did I act on my plan? If it was a winning trade, then you made everything right. If it was a losing trade but you still acted within your rules, then it's no big deal. You just collect stats and then you can analyze your statistics later. But it is so important that you always make sure when you look at your trades that you ask yourself, was I accepting my rules? And on the other hand, if you broke your rules, and you have to be very honest to yourself here, if you have a winning trade after you broke your rules, then you were just lucky, and you should acknowledge that as well. If you have a losing trade after you broke your rules, then that's what you deserve. So second tip is always focus on execution, and then the money will follow. And I will have a few tips around that later when we come to the review process as well. There are a few people in the chat said no sound, but I guess it's okay. Can you just confirm? Okay, perfect. Thank you, guys. So if you follow the process, then the money will follow. There's also a trading quote. Okay, I'm not going to try to quote that, but I guess you get the point. So here, this is one of my favorite graphics, is what you can control versus what you can't control. Here on the left-hand side, what you can control, it is you can see it's very short, and it's price movements and the outcome of a trade. And although you have a little bit control over the outcome of a trade with trade management, but you can see you have much more control about all the different variables of a trade. You are the one who can decide when you enter the trade, you decide when you're not to trade, which is probably even more important than knowing when to trade. you decide what you trade, and when you exit the trade, you determine your risk, your position size, so you define your worst case scenario when price hits your stop. Obviously sometimes, just like last week or 2 weeks ago with the GBP event, this is out of our hand, but for that we have other risk management tactics, and also choosing leverage wisely is here important. You choose your tools, which are indicators, technical analysis, patterns, and so on. You control the feelings towards the outcome of your trade. Do you get frustrated when you lose, and how do you deal with that if you get frustrated? And also you control your learning progress and the process overall. So here on the right hand side are my 5 top tips that I think can make a big difference. Probably you've heard them, but I have here them next to my monitor on sticky notes, and I make sure that I review them every day. And so the first one is very important. Stop watching your P&L, which means stop watching your broker balance during your trading day. I even go so far that I have 2 accounts. I use TradingView for my charting daily, and once I see a trade on TradingView, then I start my broker platform, I hammer in the trade, and then I close my broker platform again, and I will go back to TradingView where I watch my trade and follow my targets and my plan. So this creates a little bit of a barrier. So when I watch TradingView and I think, oh, maybe I should exit my trade, price is moving so much in this candle, then it takes a few seconds to fire up my broker platform, and then I have the time to reevaluate and rethink what I'm actually doing, and I can assess if what I'm doing is the correct thing or am I emotional, and that's happening a lot. I don't have daily, weekly monetary targets, so that's maybe a very common question that I get on Tradeciety a lot. It's where people ask me, how much money can I make as a trader? How big does my account have to be so that I can make X amount of dollars per week? And this is a very dangerous question to have, because you have no control over the amount of trades that you can have in a given week. You also cannot control, if you have a valid trade signal, if it's going to be a winner. Variance and account volatility, probabilities play a very big role in trading, so having monetary targets creates an anchor, and it forces some people to take trades when there are actually none. So don't have monetary targets, don't try to make X amount of dollar. This is not how trading works, and you just have to take it as it comes. Instead, you should have daily loss limits, which are very important. I think my rule is after 2 losers in a row in a day, or given a percentage loss, then I'm done for the day. If I feel upset and I've seen that I've broken my rules and my losses were emotional driven, then I will even take out a few days, maybe take a long weekend and go back to my journal, review my process and see what is going on and try to flush my mind. There's a good book called, not sure the author is called Josh Waitzkin, I think it's The Art of Learning, and he is a professional chess player and a coach now for high performers, and he has a lot of great techniques and tactics for dealing with emotions, and yeah, I think it's a good read. Instead, switch to executional goals, and that's one of my favorite things. Is I don't look at the outcome of a trade. I have a strict trading plan. I use checklists like we will see later, and then I always, before I enter a trade, I make sure I'm following my plan, I'm having all the criteria from my checklist, and if I've done that, I've done my job. I don't look at the outcome, and then after 50-60 trades, I will come back to my history, my trading history, evaluate, have I done my job correctly, have I executed my trades within my plan, if so, why am I having so many losses, or is it going well now, and then I will have to evaluate a little bit further, but we'll get into that as well. So, and only concentrate on what you can 100% control, and this is the key, because if you focus on price movements, I see so many traders always say, oh, I hope my trade works out, I hope it works out, but you have no control over the outcome or the way it moves, so it is very hard to take responsibility for that. whereas if you focus on the things you can control, it is much easier, or it is possible to take the responsibility for your actions, and only if you are able to take responsibility, then you will also be able to grow from that. The name of the book is The Art of Learning. I think the author is Josh Waitzkin. There's also a very good podcast with him on 4hourworkweek.com. So this is a very interesting study, and the title is Entries Don't Matter That Much. That's more of a clickbait, but we will see what this is all about. So there was a very cool study, and the traders, there were two groups of traders. There was like a stock picking game or risk management game. I'm sorry, I don't have the actual source here, but there were two groups. The expectant, they were trading the same trading method, or they were given the same entries with a positive expectancy at the end. The only thing that was variable was position size. So before each trade, one sec. So before each trade, the traders were asked to determine the position size for their trade. They were able to vary the position size based on a trade-to-trade basis. And the two groups were, the first group were normal traders, just like any retail traders. And the second one, they were also normal traders, but they had, I think it was a like 30-minute or 1 hour lesson about risk management and risk in general, some variance and probability theory as well. And the results are astonishing. From the normal group, 8 from 20 traders lost their whole accounts, even though the system had a positive expectancy, and the problems were obviously over leveraging. So after a loss, often they try to make it back, or after a string of winning trades, they thought they were invincible, and they increased their risk and then lost all their previous profits on just 1 or 2 trades. And the other group, where they had the same trades, the same system, and only 2 out of 32 lost their whole account, which is a huge difference. And also from the second group, 80% were profitable over the term of this experiment. So the problems here are obviously not entries, they are not indicators, there are not any chart patterns or anything else. The problems here are purely emotional responses. They emotionally adjusted their risk, as I said. Biases, psychological biases played a big role. And yeah, so they were only thinking from one trade to the next. They were giving too much emphasis on one trade. And so this is a very key thing. And I think that it is something to take home from here, is that don't get hung up on one trade. If you want to make this your career over the next 20 years, then expect that you will have hundreds and thousands of trades. So don't let any one trade have such a big impact on your emotions or even a string of trades, and especially don't let any one trade have a big impact on your account. And don't focus so much on entries, and always keep execution in mind. And one more study that I have, which I think is very funny. So there were traders, and they were interviewed about winning trades after losing trades. And so the traders, they attributed their losses to difficult market conditions. They gave away the responsibility. They always looked for situational mistakes. Maybe if you have been around in trading forums on social media, you would always see that people blame algo trading, high-frequency trading, central banks, and all that stuff, and they think, oh, I'm a good trader actually, but it's always happening something that I cannot control, and that's why I'm losing. And even when people lost money for months at a time, sometimes even years, they still rationalized their losses as part of the learning curves. They gave away responsibility, and they never looked at themselves, which is a main problem. And if you are one of those traders, then you will have a very hard time being a professional trader, or even a break-even trader if we start there. Because you have to be very realistic, and you have to always to look at yourself. You're not trading against anyone else. The biggest opponent that is that we have as traders is ourselves. We have to conquer our emotions and make sure that we don't screw up after losses or wins. So be realistic about where you're standing. You have always, although it hurts sometimes, you have to be honest with yourself. After years of failing, what are you still saying to yourself? Do you think, oh, I still can be a professional trader, I just have to find a better method, or markets are just unfair, and yeah, don't daydream and don't try to rely on luck. This is something that you are in because you want to make this a profession, and you have to take this seriously. So self-awareness has a bad ring to it. People always connect it with the woo stuff, like spiritual things, and I want to show you that self-awareness in trading, and not only in trading but anything where you work on your skills, is something very different, and I will have a few, oops, don't show that again. And I have a few very practical tips how self-awareness moves away from spiritual stuff to very practical tips that you can incorporate in your daily trading. So first of all is journal your trades. And as I said, well, let's start here. When I talk to a trader and then I ask him, so how about your last 5 trades? What do you think about them? And then often they don't even know what their last 5 trades were. Sometimes they don't even know what their second last trade were, and this is a very bad sign, because if you don't know what has happened in the past, then you will not be able to learn from that, and yeah, then if you are doing the same mistakes over and over again, you don't see them as a problem because you're not even aware of them. So start journaling your trades is very, very important. If you are a businessman, then you know that being good on your numbers, knowing your numbers, having accounting practices is so key. No businessman would ever just go from month to month and see and not try to find where he's making money, where he's losing money. But as traders, we don't see that, or sometimes we think it's too much work. Trades should be just clicking a mouse and having a good indicator, and then money will follow. But yeah, that's if I see a trader who doesn't have a journal, and it doesn't even have to be like a fancy spreadsheet or anything. If you want to get started with this, just get a paper sheet, or what I always recommend is for each trade that you take, grab 2 screenshots or 3 screenshots from the entry, one during the middle or at the end, and then one after you close the trade or a few hours after you've closed the trade. And even that alone, if you go over your past trades, you will very quickly see, do my trades look very differently? Do they look very similar? And if you see that trades look very differently, then this should set off your alarm bells, because if you are a technical trader, you should follow the same patterns, and if your trades look completely different, then you're obviously doing something wrong. And this is a good tip that I think is worth exploring. Just a quick one, out of all my own needs, so I said I come from heavy accounting and corporate finance, and I knew that journaling is something, or keeping records is something important. So I created with my friend who comes from poker, Edgewonk, which is a professional trading journal. It is not a must, as I said. Start with the screenshots if you just want to start out and get a feeling for it. But if you want to have a little bit of a more professional approach to journaling, Edgewonk.com, we have a free trial, and yeah, just check it out if you like. This one is also one of my most favorite practical tips. It's get a checklist and don't use intuition as an entry criteria. There's also a very good quote from Magnus Carlsen, who's, or was, I'm not sure if he still is, the world champion in chess and the #1 rated chess player. So, and he said, I usually know what I'm going to do after 10 seconds. The rest is just double checking. And this also applies to trading. If you are a technical trader and if you don't change your system all the time, then after you look at the chart, you should be able to tell very quickly if you have a valid setup or not, or if the market is looking promising or not at least. And if you can't tell that, then either you don't have a setup or you don't know your method well enough. But at the same time, it does not mean that you just take 10 seconds and look at a chart and then hammer in your entry order, but you should take a step back, take your finger off mouse, and have a checklist. So here is a sample on the trade checklist that I use in my trading and that I have shared on social media and my blog, and I think it's a good one to have, so let me just go over it. So first of all, it is just one point, but you should have always your entry criteria, and that's where most people fail already. They don't even know what their entry criteria are. They think, okay, maybe I just have a moving average crossover and the price will just run and give me my profits, but there's much more to it. It's market conditions, volatility, momentum, and everything around that plays into that as well. I will give you more examples about that later on. Thank you guys for the audio confirmation. Also, the trade is in my trading plan. I will never ever take a trade which is not in my trading plan. I will show you later how I do that, and in the next point actually. And a trading plan is something so important to have. It's just like getting into a car. You just get into a car. You don't get into a car, you fire up the gas, you hit the highway, and then you ask yourself, so where am I going? And it's also especially true in planes. You would see that in planes, having a checklist is one of the most important things, and you will always have checklists in place. New news announcement ahead of your trade is important, so you don't want to be one of those traders who enter a trade and then see, oh, okay, actually there are NFP coming out in 1 minute, so what should I do now? That's a big amateur mistake. The reward to risk is acceptable. Do you have enough room for your price to go, and is your risk okay? Don't try to manipulate your stop loss just to get good reward to risk ratio. It's also big beginning mistakes. I feel good emotionally and physically is important. Don't trade when you're sick, when you're hungover, come back from the club or something. If you have stress at work or with your family, don't try to trade. It's not going to work. There will be another trade tomorrow, next week, so if this is going to be your career, don't worry about one trade and just come back when you are in a good mood. And finally, accept the loss. And whenever I say that, I get a lot of controversy, and people say you should never accept to lose, but if you are entering trading with a big ego or with any ego at all, you try to avoid losses, then you are in for a very rude awakening. And so my final tip is manual preparation and written review. I'm a very big believer in routine, so let me just briefly walk you through my routine. Every Sunday I go through 27 markets. I create trading plans for every market. I try to find which market is going to be interesting for the week, which is not going to be interesting, and then I write my trading plans. I set my price alerts, which is a big time saver, especially if you are just trading from one screen. And then during the week I don't do much. I update my trading plans, I wait for my price alerts, and I journal my trades. And at the end of the week I have a bigger review process where I go back to my Edgewong trading journal, I go over my past trades, I enter my trades, and then I get a very good feeling for my trading of the last week. It gives me a heads up. Do I have emotional problems? Do I make mistakes that I repeat? Or maybe even is the market condition changing? It's all telling me in my journal and my routine. So let me just check the time. I guess we still have a few minutes, so I'll just go over my strategy a little bit. If you want to know more about that, youtube.com/Tradeciety is it, I think. Yeah, and you should find my strategy in a playlist there. But so you can see that I put a lot of emphasis and work in my preview, in my routine, in my trading plan writing, in my journaling, and when it comes to my strategy, I keep it very, very simple. And this is something that I think is very important. You don't get overcomplicated. I have a very strict routine, as I said, and when I see something that isn't working, I can immediately see what's the problem here. So I'm a mean reversion trader. I trade reversals on the 4-hour time frame. My 3 tools are the 20 SMA. On the 4-hour chart, I use Bollinger Bands, which I set to 2.5 standard deviations to get only the very extreme price movements at the bands, and an RSI to spot divergences and convergences. And I use trend lines, support, resistance, and supply and demand. So what I do is, and this is actually my screening process, is I look for a strong trend, at least 2 trend waves, preferably 2 or 3, 3 or 4. If the market is not having it's not trending strongly, I don't even bother looking at it further, and wait for the next one is I don't force trades, and I always wait for price to come into a high impact area. As I said, this is support and resistance, supply and demand. And the way I do that is on my Sunday analysis, I go top down on my markets and I set my price alerts on very important key support, resistance and supply and demand zones, and then I close my charts. I don't follow price action during the day. I just wait until the price alert goes off and then I come back to a chart. And this is also a very big thing which I would recommend to anybody. There's always the myth of having more and more screen time, but what always happens, if you have too much screen time, you're just glued to your screen, nothing is happening, then you end up forcing trades, which I think is a big problem. Look for reversal signals is, I don't try to catch tops and bottoms in my reversal trading, which is the dangers of reversal trading. And I look for divergences on my RSI, and the good thing is that once the divergence is formed, then price has already started to reverse a bit, and this keeps you away from catching tops and bottoms. And then the Bollinger Bands are used for either spikes, where price spikes to a Bollinger Band, then immediately reverts back into a band, or I look for exhaustion, where price was before able to trend outside the Bollinger Bands and then suddenly fails to reach them. And then my final criteria, which I think is very important, and I call it my holy grail, and when people hear it, they are always shocked because it's so simple and sounds so stupid. But and let me tell you, there's nothing special about the 20 SMA. You can use the 21 SMA, the EMA, or whatever you want, but what it does for your trading is much more important than which tool you use. And the 20 SMA is a filter criteria. I don't take long trades when price is below the 20 SMA, and I don't short when price is still above the 20 SMA. And this is another insurance mechanism which keeps me from trying to pick tops and bottoms. And yeah, so that's so don't worry about the 20 SMA. There's nothing special, and you should just have the tools that make sense for you and your own trading. So here are 4 trades now, which I will just show you the simplicity of my method. So this is one I remember well. It's the US dollar Canadian. We were in this downtrend. Oops, 1001. Nice, guys. And yeah, so we were in this downtrend. You can see price was trending here lower on the outer Bollinger Bands. Then suddenly, boom, we had this spike here below this double bottom or triple bottom, caught a lot of stops, and then immediately reversed. And again, we don't try to pick the bottom. We don't enter here. We enter here once price moves above the 20 SMA, which is the black line. And don't worry if this is confusing or doesn't make any sense. YouTube, again, I said youtube.com/Tradeciety, and there you will find a playlist which is called Reversal Trading, and there you can spend hours and with all the videos, and it's free, and yeah, just for you. Another one here, we were in this uptrend here, and price was suddenly just drifting sideways. We had a little bit of a failed breakout attempt, and then boom, suddenly this large candle here where we broke below the 20 SMA and then started this new downtrend. And again, you can see here, if we would draw a RSI divergence here, actually that's the one. You can see here, price, the RSI is making a lower high, price is making higher highs, then this momentum shift, the failed breakout, lots of 1, 2, 3, 4 candles that failed to reach higher, all are leaving wicks, and then we are breaking lower. Another one, very similar, price was trending higher, then we were drifting sideways, we made a final attempt to push higher, lots of volatility here in this market top, then we had this double top where price was not able to reach the outer Bollinger Bands anymore. We moved lower, broke the 20 SMA, broke the previous lows, broke even lower, and then I entered here on this trade once all the support to the downside was broken. And yeah, you can see there's nothing special about my method. It's very simple. All my trades look the same. And as I said again, if you don't want to get a journal, it's not a big deal. try at least to capture screenshots, be consistent with that, and then you will already see, you can see my trades always look all the time, they look very identical, and when I see my trades doesn't look that way, that I know that I did something wrong. And I think that's the last one, very similar as well. Price was trading higher, we were in this double top here, this green candle poked the outer Bollinger Bands, there was a big resistance up here, failed breakout, we moved immediately back. Here is a strong candle which closed below the 20 SMA, which also closed below this trend line, and then we sold off from that. And yeah, so again, nothing fancy, very simple, just following the rules. And now let's wrap it up. So my 3 main takeaway points is audit your performance and find the real is the keyword here, cause of your problems. I've never seen a trader who is losing money because he's using a wrong setting on the MACD, or using a wrong period or different period setting on his indicators. It is in 99%, if you're not making money now, it is always an emotional problem or methodical problem how you approach it. And I really encourage you that you start to look at the real cause of your problem and take responsibility if you are screwing up. And then second, improve your process. You have to start putting in the work, start taking trading seriously, plan your trades, journal your trades, review your trades, and then you can improve. And especially if you are still having a 9-to-5 job, it is very important that you have a solid plan, a solid routine, and this will even save you time, as you will see if you start doing that. And then finally, recognize the progress. You have to understand this is not going to be something that you will master after a few days. Understand that it will take time, enjoy the process, and yeah, stay patient. And if you want to get in touch with me, Tradeciety.com is my blog. We have trading articles, everything is free on there. Edgewonk.com is the, let me go back. Edgewonk.com is the trading journal that we have. There is a free trial, you can check it out if you like, see if it fits your criteria. And if you want to see more, youtube.com/Tradeciety, there will you basically find my whole method, facebook.com/Tradeciety.com, Twitter as well the same. And if you want to reach out, I'm always very happy to chat with anybody. And yeah, just reach out to me and I'll be very happy to hear from you.